All right. Welcome everybody. I'm excited to just go over, the listings that we really see get acquired on acquire.com. Go through just some high level tips that I think every founder should know. And then I'm actually going to walk through the product. I'm going to quickly go over how to create a listing with us to really start the journey of potentially selling your business with us. So without further ado, I'm going to jump in. If anybody has questions as I'm going through this, feel free to type questions. I'll do my best to answer them either at the end or possibly during this presentation. But let's get going. So today's webinar topic is how to list your startup on acquire.com, where serious founders start their exit. And to really preface what I'm going to be talking about is just being real about a lot of the listings that we see on acquire.com. A lot can be a mess, and we do a lot to improve them and really maximize buyer interest on the marketplace. But this is your first impression. This is your opportunity to really wow buyers. And it's important to understand that buyers are busy, and the more that you can do to stand out and understand that a lot of buyers skim, they're going to be scrolling. And ultimately, in this scenario, this is where a lot of founders lose. And so my hope is to change that today. And in terms of our results at acquire.com, we've been in business about 5 years, about 500,000 registered buyers. We've served over 85 different countries, which is pretty amazing. That means we've done acquisitions all across the globe, every single continent. We've closed over 500,000,000 in transactions. On the marketplace today, we have over 2,000 listings worth over $1 billion in combined revenue, and over 500 acquisitions closed last year. So we see about 1 to 2, 3 acquisitions close each day. So a ton of activity on the platform. And again, it's a great time to think about selling your startup. So I'm going to walk you through how to get that done. But if you don't know me, my name is Andrew Gazdecki. I've helped thousands of founders get acquired through acquire.com. In a previous life, I had built a number of different startups. One of them was a company I started in college. I bootstrapped that company to about 10 million in annual recurring revenue, sold that company to a private equity firm. And it was really going through that process where I thought it'd be really interesting to just bring more transparency to this process of selling your business. I remember when the acquisition closed, I had a ton of friends texting me and asked me, how'd you find the buyer? What was due diligence like? So acquire.com was built essentially through that experience where I just thought, hey, why don't we get all the buyers in one marketplace, really giving founders the best opportunity to sell their business. And this webinar, I'm just going to be talking about the playbook that we go over almost on a daily basis with a number of different founders to really help you get acquired. We are going to be going over how to write a listing that actually gets interest. What I see a lot on acquire.com is a lot of these businesses and these founders are essentially over explaining or using a lot of buzzwords, things that aren't really going to immediately capture attention. And here's really what buyers are going to be caring about. They want to know the traction of the business. They're going to be looking at the revenue, the profitability, the growth rate of the businesses. And I'm going to be going over just a lot of mistakes that I see that can unfortunately kill acquisition opportunities, real acquisitions of deals that we facilitated at acquire.com recently to give you an illustration of what is selling on the marketplace today, how are they positioned, and just give you a little bit of backdrop on the story of what really made them get acquired. So really going over why this matters. So your listing is essentially the first impression with a buyer. It's your pitch deck, it's your elevator pitch, it is the filters that buyers use, all wrapped up in one. So getting your listing correct and polished is the best way to spark that initial interest. And it's what leads to everything else. It's what leads to signed NDAs. It's what leads to conversations with buyers. And the more conversations you have, the more potential offers you can receive from buyers. And that's really what's going to maximize your exit and get you the best price and the best terms. If you get it wrong, you're not going to get as many responses, and you're just going to kill that initial opportunity. That's why, before going live on acquire.com, putting a little bit of thought into the listing and the positioning and how you're wording things can really go a long ways. And one thing I like to also point out is you need to actively sell the opportunity. You need to give buyers a reason to want to acquire your business. Just stating, why you built the platform or what is moderately interesting typically isn't enough. Most buyers want to know the traction. How are you, different than other platforms? So being able to articulate that really clearly and really concisely is going to make all the difference. And then the best buyers, they move fast. The best buyers, they aren't window shopping. They have capital. We verify proof of funds on acquire.com. They have deadlines, and your listing really has one job, which is to get them interested. So I'm going to be going over a lot of this in terms of what I see really stand out on acquire.com and what kind of falls flat with the buyers that we work with. So right at the top is going to be nailing the hook. So this is the first thing that most buyers are going to see. And with the initial headline of the listing, you don't want to start with your vision. And what I mean by that is, let's say it's revolutionary AI focused platform for HR teams or something like that. That's a great headline, but I always recommend starting with attraction. So this means, what is your TTM revenue? What is your margin? What is your year over year growth? Is the business profitable? So headlines that I love are something like SaaS business in HR tech with 500,000 in TTM revenue and 250,000 in TTM profit. It tells the buyers what kind of business it is, what market is it in, the revenue, and then also the profitability. That immediately captures attention way more than something that's a little bit more buzzwordy, so to speak. And then in terms of how do you explain the product in one line, I always recommend something that is just easy to understand and how you would explain the product to a friend. So in this example I have, we help Shopify stores recover abandoned carts via SMS and not an AI-enabled retention vertical optimization platform. The first one is just really easy to understand. It's very clear, very direct, doesn't have buzzwords. And the second one, it sounds awesome, but it's not the best position to message to buyers with a very buzzwordy, visionary type line. And we help with all these items at Acquire as well. But again, the best listings that we see are more direct, more to the point. Because again, the goal here isn't to explain everything. It's just to capture initial interest with something that's extremely easy to understand. And then make sure to show real metrics, show the metrics, show your traction, the revenue, the profitability, the margin, your churn rate. If you have really low churn, that's definitely something to call out. Your customer count, what types of customers? Are they enterprise? Are they SMB? How many of these customers are there? Are there any really meaningful customers where they're logo customers? Is it Nike? Is it maybe a large university? Is it another startup that other people recognize? These are the types of items that buyers really want to know, and they want to know them fast. So make sure you aren't hiding these numbers. Bring them to the forefront, really advertise these, because this is really what gets buyers interested. And this is what buyers are looking at when they're quickly scanning different listings. They want to know, what is the traction? Is there any indication of product market fit? How profitable is the business? What is the margin? Is there low churn or is there high churn? Is there a large number of customers or even a large number of free users? For example, you could have 10,000 free users. And when a buyer hears this, they could be thinking opportunity. Maybe there's an opportunity to convert more of these free users over to paid. Maybe the churn is, moderate, and there's an opportunity to lower that churn. So just calling out these numbers, even if they're not the best, leading with your best ones, but then also don't hide numbers that may not be amazing as well, because that can present opportunity to buyers. So again, show, don't tell. You want to position the business that you're selling as 200,000 annual recurring revenue from 300 agencies using our AI copy tool. This is far better than the example on the left where you're disrupting AI with a visionary platform. The right-hand side tells me a ton more than the left-hand side. I know the revenue traction. I know how many customers you have. I have an idea of what the product is, what market it is. I assume this is for other marketers and potentially other startups. The left-hand side, I'm not really too sure. So again, the more you can add in terms of your traction and simplifying the message, the better you're going to see. Because a lot of listings we do see the difference where one listing, using the example on the right, will have potentially hundreds of NDAs signed by buyers, and then the listing on the left-hand side is going to be in, the low dozens. So it definitely does make an impact. And then going over just some red flags that we see all the time where I'm a buyer looking at different listings on acquire.com. Here's some things that are going to make me pause or going to make me a little confused or just not interested at all to learn more about the startup. The first one is going to be missing numbers. This is where just things aren't adding up. And my first thought here is, if the numbers aren't adding up, then what else doesn't make sense? Or is this even an acquirable business? Overpriced with no logic. This is a big one too. When startups overprice on the valuation, and there's a number of other startups that are valued on more realistic ranges or realistic pricing, these generally just get overlooked. And so if you're pricing on the higher end of the range of recommended valuations, I recommend having some justification for that. How did you get to that multiple? Why is your asking price at that price? Being able to defend it with buyers, that's absolutely critical. No clear product market fit. This would be generally products with just not a lot of revenue. These ones are always hard to price, hard to sell. So if there isn't any sort of clear product market fit, just outlining why that is. Is it a new product? Is it because there just isn't a fit for this product? Whatever it may be, just explaining that a little bit. But missing numbers, overpricing, no logic, no clear product market fit, confusing buzzwords. You need to make your listing easy to trust, or it generally will just get ignored. Because you also need to understand there's a lot of other businesses on the market today. I think it's a great environment to consider selling your business. But with that becomes more competition, more startups with amazing numbers, priced realistically, strong product market fit, clear listings that are easy to understand. So that's your competition. And so everything you can do to stand out against other businesses looking to sell, to capture buyer information, is going to be critical. And it's really the difference between successfully selling your business or not selling the business at all. And then I touched on this just a second ago, but you really need to earn the multiple. So if you're asking for a 5x multiple, that's awesome. But understand, this is what buyers pay for. They pay for growth, clean books, loyal customers, and defensibility. And you want to really be able to talk about all these things. How much growth? Do you have a clean P&L? Do you have your expenses broken out by month with revenue? In terms of loyal customers, what is your churn rate? How many of the customers have canceled in the last 6 months or 12 months? What have they said when they canceled? Do you have positive reviews or feedback from customers that you can share with buyers? And then the defensibility. How long have you been in business? What makes you think this business won't be disrupted in 12 or 24 months? It doesn't need to be a rock solid case, but enough to just appease buyer concerns around maybe churn is really high and there isn't much defensibility in the product, or maybe the product is in a market where there's a lot of different R&D happening. Just being able to speak to the market and the defensibility of your company is going to be huge. And if you're going after the higher multiple, you need to be able to show that you've earned it and justify that multiple with buyers. Otherwise, it's not going to be taken seriously by buyers. And this is a huge one. So make it visual. When you list on acquire.com, we allow you to upload slides or screenshots. You can upload videos. And the best part about this is it doesn't really take a lot of effort to put together additional materials, create a small pitch deck. We actually assist with that at acquire.com. We have a small type form you could fill out, and we'll actually create you a buyer presentation so you look absolutely amazing. And it's only accessible to buyers after they've signed an NDA. But another big recommendation I have is record a Loom video. Walk through the product, really show them, how does it work? Who did you build it for? Why are you selling? These videos can be 2 to 5 minutes long, or 10 to 15, however long you want to record them. But what it does is it immediately builds trust. It's essentially a great way to think about the first meeting with buyers, but instead of having the meeting, answering questions that you could just guess that most buyers are going to have, record a video in advance, because then a buyer could sign the NDA, they can access your data room, they can immediately begin to really deeply understand the product from your perspective. How does it work? What are the amazing parts about it? What do customers say? And then why are you selling? What is the opportunity for a new buyer? What is the potential growth opportunities that maybe you haven't touched on? Again, this builds trust by a huge margin, and the best acquisitions always have trust. So this is a great way to just speed up the process with buyers. And when you speed up the process with buyers, this speeds up offers and really helps you maximize your acquisition. And here's just a few listings that sold fast on acquire.com. Recently, we had an acquisition for 4.5 million. It was a GPU cloud platform. What really stood out about this business was it had extremely defensible technology. It was in a market that was really, really hard to enter, really great product, tons of happy customers, and it was also extremely profitable as well. It was positioned as a low-cost alternative to AWS, and the buyer that acquired this was a strategic buyer. They had a footprint in the market, and this allowed them to accelerate that footprint. So this was a great acquisition in terms of having an amazing listing, having a ton of supporting documents, being extremely responsive with buyers, having really clean numbers, and just a great product as well, and positioning it in a way that really stood out to buyers. Another SaaS sold for $6.5 million recently. This was an extremely profitable business as well, and they were essentially an automated customer support platform. And this was a very appealing acquisition to a number of different buyers. This one was awesome to work on. And what I love about acquire.com is through these two acquisitions, these entrepreneurs essentially became millionaires by getting acquired, and we were able to be a small part of that journey. And then the third one is a Shopify app, and we see a number of these sell every single month. This one sold specifically because it was really easy to operate. It was recurring revenue, low churn, sticky customers, also profitable. And what all these businesses had in common was clean listings, good timing, and realistic pricing for the acquisition as well. When you get all these things right, you tend to get the maximum interest from buyers, and maximizing the interest from buyers is critical to having a good process, fielding a number of different offers. And when you field a number of different offers, that allows you to have a competitive process, which maximizes the chances the acquisition closes, then also just getting the best terms and the best valuation as well. And always remember, you don't need to have a polished business to list on Acquire or get acquired, but you do need some form of growth, ideally some profitability, and then time to talk to buyers as well. The last one is the most important thing I can stress is when you're selling your business, you're in a sales process. You need to make time to set meetings, to answer questions, go back to buyers that were previously interested, follow up, answer any due diligence requests that they have, and really let them know that this is an acquisition where it's not about if the business is going to sell. You're really trying to figure out who are you going to sell it to. And the more responsive you are, the more information you're going to be able to provide to buyers, the better. And this takes time. So just completely understand this is a sales process. You do want to talk to as many buyers as possible. They will have a good number of questions, but the time and effort is absolutely worth it. And, sometimes I meet founders that are ready to move on. They're working on something new. Maybe they've already launched another company. And sometimes I have to explain that this process does take time. It's not as easy as just handing over the keys to a car and you're done. We're here to help you with this process, but as you go into an acquisition process with us, definitely understand that the more time you're able to put into the process, the better outcome that you're going to have. So what happens after you list? So you create the listing on acquire.com. It goes live on the marketplace. What happens next? So right at the top, NDAs are going to start rolling in pretty fast. You can expect typically about 24 within the first week. The following week, another 24. So that's about 50 NDAs. You're going to see a lot of buyers messaging you. They're going to have different questions. They're going to be reviewing your materials. And this is before any meetings as well. This is why having the best first impression with your listing is so important, where you have relevant information on the listing that really gets buyers interested. Behind the listing, you also have a presentation created. Again, we do that at Acquire. You upload an introductory video of yourself, the product, outlining the opportunity. All of this speeds everything up. And then from there, you're going to take introductory calls with different buyers. You're going to meet with them. You're going to understand why they're interested in your business, answer any questions, follow up with them. And that's when offers are going to start to come in. And typically on these calls, I recommend if you get to a point where a call goes really well with the buyer, just ask them, where do they sit on sending you an offer? What else do they need to see to potentially see an offer? Just asking them can really move things along really, really well. And this is just the funnel. Your listing is really just step one of capturing that interest and then converting that interest into formal offers with buyers. And then always remember, we help at literally every step of the way at acquire.com. Our M&A team helps founders all day long with optimizing listings. I should note, when you list on acquire.com, one thing that we do as well is if the listing gets to our team and it looks absolutely terrible, we'll go in and we'll update everything. We'll pull out different things that we think will make the business stand out more, because we're aligned in terms of helping you get acquired is how we succeed. So if you're not successful, we're not successful. So we optimize listings all day long. I was actually doing that this morning with a number of different businesses. We'll put together pitch decks. We'll put together mini SIMs, which is a confidential information memorandum. And then once you're live in the marketplace, that really is just step one. We'll help review any offers that come in. We'll give you our opinion on them. We'll help you structure the best deal that makes sense. For example, is it 80% cash down, 20% seller financing, and you have another offer at 100% cash on closing and you're not sure which one to pick? We love helping in those situations. Buyer vetting, meaning a buyer's submitted an offer, but you're not too sure of the background. Is this an offer that you should be taking seriously? Have they verified their funds with acquire.com? We help with buyer vetting in those scenarios as well. And then closing support. So you sign an offer. You have just the dream offer. It's 100% cash on closing, moving into due diligence, and then drafting the asset purchase agreement, and then flowing into escrow and safely and securely closing. We help out in all those scenarios. And you're not on your own either. We've helped 1,000+ founders do this. And again, we do this every single day, and we love seeing entrepreneurs succeed. That's why we started the company. And so definitely understand, when you work with us, every step of the way that we can help, we absolutely do so. So the buyer network, who can you expect to sign an NDA, begin speaking with? We have over 500,000 vetted buyers on acquire.com. And these really can fall into three main buckets. So the first is going to be private equity firms. So these are firms that are always looking to acquire different software companies. Other solo founders, maybe they successfully sold their business. They're an acquired founder. They're looking to jump into a new business, but they don't want to start at essentially zero. They want to jump over to where there's a little bit of product market fit. They can focus on sales and marketing, or there's an existing team in place. Family offices. Then we also see other companies, strategic buyers. So you're going to see a diverse group of buyers interested in your business for a number of different reasons. Financial buyers are going to be most interested in the revenue, the profitability. And then strategic buyers are going to have more of a focus on the product, the growth rate, and just the untapped potential. But appealing to all these buyers is really what we help you focus on doing. They're all looking to acquire profitable online businesses, and we bring more buyer exposure than any other company in the world when you list on acquire.com. And just some M&A tips as well from the trenches. So right at the top is get your P&L in order before you list. This is a document that every single buyer is going to be requesting. They're going to sign the NDA. They're going to want to know the financial performance of the business. So spend a little bit of time going over the P&L, make sure it makes sense. We also can assist with financial recasting as well. That's where we look at your expenses, and if there are any items that we feel can be added back to the net profit line, we can work with you on that as well. Be upfront about the risk. This is something all buyers respect. No business is perfect. What's gone really well, the business? What hasn't gone well? Just calling those things out, I think, goes a long way. One thing that I've liked seeing from different founders is sometimes an outline of who this is a great acquisition for and who this is not a great acquisition for. That's a great way for you to qualify different buyers and help really outline who this is an ideal acquisition for. The next one is just respond fast. Speed absolutely wins deals. This is a sale process, so the more responsive you can be, the more helpful you can be with buyers, the better experience you're going to have on acquire.com. And try to avoid the just checking in messages. Um, when you go live on acquire.com, initially you're going to have a lot of buyers reach out, sign NDAs, ask initial questions, and some of those buyers will go silent. So you're going to want to follow up in those scenarios, but instead of just checking in or saying, "Hey, how have you been? I want to just touch base," provide every buyer with some additional value when you follow up. It could be other questions that other buyers have asked. It could be maybe materials that you've recently uploaded. It could be maybe new features that you've launched or a new customer that you've closed. Or it could be, "Hey, we've gotten pretty far along with another buyer. They're going to be submitting an offer soon. Where do you sit on potentially submitting an offer on our business?" Anything that you can do aside from just checking in, add a little bit of value and give a little bit more information to buyers when you're following up with them. And don't be a ghost. Questions that are asked of you, respond quickly, be responsive, understand that you're running a process, and the faster you move things along, the better experience and the better acquisition process you're going to have. And that ultimately allows you to really maximize the opportunity. And in terms of what founders say, we have stories like this. Um, we have hundreds of stories like this, thousands of stories where we see acquisitions take place in 3 weeks or multiple LOIs in the first 30 days. Or acquire.com was faster than a banker and then also cheaper. We've helped over 1,000 plus founders exit, real results, real exits, and you could potentially be the next. So final reminder, buyers don't chase listings. Really make it obvious what you're selling, why they should be interested. Make it extremely easy for them to say yes. And then you need to stand out fast because buyers are looking at dozens of different businesses on acquire.com. So the easier you can make it, the better. Do it right and the right buyer will show up. Again, we have over 500,000 buyers on acquire.com. Many of them are active on a daily basis. We also do a ton of marketing for your startup where we share the opportunity on social media to our entire buyer base multiple different times. So the amount of marketing exposure that we're able to give startup founders is unmatched. And this is how great deals start. List well, get acquired. It all starts with the listing. So sell your startup the smart way. You can join 1,000 plus founders who exited through acquire.com with expert M&A support, access to 500,000 serious buyers, and aligned SaaS fees only when you close. So we truly are in line, and your success is our success at acquire.com. And I hope we can help some of you get acquired. At this point, I'm going to be going into the platform and just walking through the listing process to give you an idea of how the product works. But I'm going to go and answer a few questions. If you have questions, feel free to put them in the chat and I'll jump in and I'll get those answered. Okay, here's some good questions here. Put them in the chat and I'll move through a few of these and then I'll jump through the listing process as well. How ready does my startup need to be before I list? Like, is it okay if I'm still figuring out a few things? Absolutely. Yeah. I mean, we work with a number of different founders at different points in their founder journey where, some are perfectly ready to start meeting with buyers. Others need some help. And this is also where we can come in as a team is we've seen thousands and thousands of different businesses listed with us. And we know exactly what stands out, what doesn't, things that are missing, what should be added. So absolutely. Another thing to note is when you list on acquire.com, it won't go live until we get the thumbs up from you as well. So you could start the listing as well. Or you can start the listing or submit information on acquire.com and we can reach out and have a conversation. So definitely if you're on the fence, I definitely recommend moving forward. What's one thing you see in listings all the time that instantly kills buyer interest? It's going to definitely be the vague, buzzwordy descriptions of the business and not leading with traction of revenue, profitability, growth, customer count, things like that, where it's kind of vague of what the business does. Another one is going to be overpriced businesses where the valuation range just doesn't make sense. It's not easily justified. That one absolutely reduces buyer interest by quite a bit. I've got profit and growth, but the operations are a bit of a mess. Should I clean that up first or list the business anyways? if you're profitable and the business is growing even moderately, there's going to be a large pool of buyers that are interested in acquiring your business. So I would absolutely recommend moving forward to listing. Is it better to lead with revenue, team size, churn rate? What actually makes buyers sign NDAs? I would lead with whichever number you're most proud of, meaning is the revenue number sizable? If it's over, 500,000, hundreds of thousands, I think I would absolutely lead with that. If churn is at a point where it's something that you're proud to state, where it's low churn, maybe it's 2-3% monthly or 4% monthly, I would lead with that. Typically, team size I would not recommend in the general heading. How much do buyers actually care about how exciting the product is versus how solid the business is? That's a great question. I mean, most buyers don't. It depends on the specific buyer, but most buyers are going to be interested in the solid metrics of the business rather than how much potential the product has, because buyers are really valuing the execution that you've had to date and not the future potential of the business. I hate writing about my own product, but how do I not sound like I'm pitching a TED Talk? We can definitely help in terms of describing the business and highlighting the best parts of it. So if you're not the best writer, feel free to just submit a listing and we can go through and edit things as well, just to make things easier. Grab a few more questions here. Is this 5x multiple on revenue or profit? Generally, what we see is for profitable online businesses, the multiples are going to be in a range of 3 to 5 times net profit. 5 times revenue multiple is pretty high. It's definitely possible, but we tend to recommend a net profit multiple rather than a revenue multiple. But when businesses are, say, under $1 million in revenue, most of the revenue is generally profit because the teams are so small. So whatever you're paying yourself as a founder or whatever you're paying in terms of costs that will not be transferred over to a new buyer can be counted as profit most of the time. There's something called SDE, which is seller discretionary earnings, which is a more realistic view into the profitability of the business. What is the range of sales for pre-revenue tech businesses where the business has a good story? These businesses, they're generally hard. They're hard to sell, but there's a big market for really, really strong technology businesses without any existing customers. You would just need a good story around why are you selling the business and what is the potential for a specific buyer. Because the buyer that you're going to need to find is going to need to be typically a strategic buyer, or maybe they see some value in what you've built. They have existing customers that overlap and it'd be easy for them to release the product to their customers and then generate revenue that way. Like I heard a story from our live event from a founder. He had just recently raised at a 65 million valuation, he told me. And he acquired a business on acquire.com for, let's call it 50,000 or 40,000. And it was a simple invoicing platform, and he merged that into his company and was able to monetize that product through that small acquisition. I thought that was a cool story. Can you send us a slide presentation via email after webinar? Absolutely. All right, let me go through the platform really quick to walk through just how easy it is to work with us and how to get started. So when you create an account initially on acquire.com, you're going to be prompted with this screen. Do you want to sell startups or buy startups? So in this example, I'm going to say sell startups. Move through this. So the initial screens is going to be starting off with the basics. So this is going to be, what type of business do you have? Is it SaaS? Is it crypto? Is it a newsletter? In this example, I'm going to pick a SaaS business. I'm going to try to go through this kind of quick too, to show you how quick it can be. So we'll do Stripe as an example. Put the website in here. And what we're doing in this screen is we're validating that an SSL certificate is attached to the startup, just to make sure that it is in fact a real business and it's operating. I'm going to list as a individual. When you list as a company, you're able to state, Stripe Inc. And then this is where you're going to connect your metrics. So as you go through acquire.com, I highly recommend connecting your metrics as well. You can connect customer revenue metrics through our partner Chartmogul. which shows your MRR, your ARR, your churn rate, your customer count. This will drive 4 times more buyer interest because buyers can quickly see a real view into the financial health of your business. And then also your web traffic as well through Google Analytics. This right here will increase buyer interest by 400 or 500%. So for brevity, I'm going to skip this. I'll put just the revenue for the business, profitability, last month's revenue, last month's profit, growth rate, 30%, annual recurring revenue, 5 million, number of customers, I have 500 plus, churn rate is going to be 3 to 5%. And this is already about 50% through the listing as well. So churn is stable. Now just more details about the business. I founded this in January of 2020. I have a small team. The startup is located in California, where I'm located. And my business model is a B2C company. And you can type in anything that is relevant to your business. Maybe it's B2C and B2B. And then the tech stack. This part is actually was highly recommended when I originally launched the company by a number of different buyers, because some buyers will only be interested in a certain specific tech stack. So definitely list out which technologies you use. It's an easy way for buyers to find you. And I'm just going to list out competitors. Competitors is also a great way for buyers to really understand what is your company, who are you competing with, because it illustrates the customer, the market, especially the market opportunity size. So I'll just use this. And this would be growth opportunities. So how could a new buyer potentially grow your business? These are some preset ones that we have that we see are really, really common, but you can also add a more specific one. So I'm going to just pick these right here for brevity. And then why are you selling? This is a question every single buyer is going to ask. I recommend saying something in additional details. For example, I'm looking to cash in my chips and retire. Something like that just gives a little more personality to the responses. How did you finance your startup? This one would be bootstrapped. And then key assets, so trademarks or patents or marketing materials, customers, website, copyright. The more detailed you can be on every single step of this listing, the better experience you're going to have with buyers. And then this is personal information. So my name, I'm the owner. I'll upload a photo of myself. And then brief background, my name is Andrew Gazdecki, and I'm the founder of Acquire.com. We help startups get acquired better than any company. Just because buyers will click your profile as well. They're going to want to get to know you. So adding this in helps them do that. And this is going to be the data room. This is where you can upload your pitch deck. This is where you can upload your P&L file. This is where you can upload all relevant information that you think will be helpful to buyers. And the more you can upload, the better. It'll just speed things along so much more. And so what we just did here is we used AI to write a quick headline of the business. And this is a longer headline as well. And you can come in here and you can edit this as you see fit. And these are keywords to help with buyer search. So I'm just going to go ahead and select all those. And this is the recommended valuation as well of the business. You can slide that up or slide it down. I recommend going more on kind of this range right here. And an asking price reason. So based on industry multiples that I've read regarding my startups. And we're getting to end here. And just like that, this listing is submitted to acquire.com. And from here, submit listing. All right. So that took 3-4 minutes. So that's how quickly you can begin meeting with buyers. From there, what happens is our review team will go over the listing, we'll polish it up, we'll reach out if we have any questions. But just like that, you begin meeting buyers literally within hours. And that's really the power of acquire.com, is giving founders liquidity and direct access to over 500,000 buyers to help you get acquired. So I hope you enjoyed this webinar. It's been a blast going over this. It truly is a joy being able to help so many entrepreneurs and founders all across the globe. If you have additional questions, feel free to reach out to the acquire.com team. We'd be happy to help. And we hope to assist you all with your acquisition. Cheers.